In tonight's session, I want to give you a few of the things that I'll be looking at coming into tomorrow and potentially the rest of the week if these things don't set up tomorrow. As usual, I'm not going to give you too many things. In fact, I'm going to give you 3 things that you can follow in real time. Even if these are not markets you're interested in trading personally, you can just watch and you can see what price does. And again, remember that the principles can be taken into any market. But I do think it's better from a learning perspective to give you a few things to look at rather than giving you levels across the multitude of markets I trade, so you're trying to trap them all and you're scrambling around like fucking Gary Glitter seeing a sign in Tesco saying kids shorts 50% off. So to address a point that Angela gave me feedback on, I'm aware that I often don't mention some markets, and it would be good for me to address why some markets don't interest me. So we are going to do that on Thursday, and I'll try going through as many markets as I can, if not all of them, in that session, so you can see if I haven't talked about this market, why not? Why is it that I'm not interested in that market at all? So for tomorrow, from a news perspective, the tier 1 data is US retail sales at 1/2 UK, and we've got Canadian CPI at the exact same time. So the very first market I want to discuss is dollar Canadian. So let's start out on the daily time frame here, and I want you to just remind yourselves how it broke down through this daily last low pre-break. And if I then move down to the hourly time frame, you'll again remember how I refined that level when we came back up into it to the low of this spike candle there, and I sold the return to it on a Friday night for the mean reversion trade because we were past ATR. We accelerated up throughout the day, took out this high straight into that last low on the hourly. So that's a typical trade that I would take. And also want you to remember how I've told you that if we thrust up and out of a last low pre-break like that, then we'll usually revisit it and key off it from the other side. So if you go back and think about where I sold on that Friday when we came in there, have a look what price did. It broke up and out of there, it came back and it reacted to that level almost perfectly from the other side. Of course there you would refine it very slightly to that low, and you could have thought about taking it long there with a stop below the thrust and looking for it to move up through this swing high. That would be your FTA. That trade worked beautifully. I didn't take it because it traded down here just ahead of CPI last Wednesday. If you're trading ahead of CPI, you're very vulnerable to slippage. If you get the trade wrong, the more size you trade, the more vulnerable you are. So I stood out of that. Sod's law, it worked absolutely perfectly. But it went up to a new high. It actually SFP'd that high. So to all those people that are asking me what an SFP is, it's break above a swing high, close below. That's how you define an SFP. You have to be very careful about context and where you trade those. I'm not going to discuss that any further now, but that candle is an SFP if you're wondering what it is. And then it moves back to the level, and we've basically sat on there ever since. Now, if we look at the chart as it stands at the moment, this is technically inside day failure. The previous day's candle was an inside day. That means the range of it from high to low was within the previous day's range. That gives you an inside day. We broke above it today and we are closing below. Now, we haven't closed yet, but at the moment we are trading below. It looks like we'll close below. And that would be an example of bearish inside day failure. So we've taken out stops above the high of the inside day. We've closed below. In many cases, if the context is great, if the location is great on the chart, I would come in and look for a short, and the target would be the other side of the inside day. So for it to have taken stops above one side of the range, and now for it to take stops on the other side of the range. However, having said all that, I'm not bearish this at all, because all of the wicks are coming off this key level. But obviously with Canadian CPI data tomorrow, I start thinking about where there's going to be levels above and below market, especially in light of ATR. Now, with CPI, you will normally see that the market that it affects will breach ATR. So the first thing I want to do is just have an idea of where ATR will come in on the day. Now, of course, I've got an ATR indicator for TradingView, but that's today's ATR. It won't reset till tomorrow. So we don't know exactly where the ATR highs and lows are going to be tomorrow, at least how I use it, because it's projected on the day from the high and low. So this is a real estimate, but if you take the ATR of 53, we can look at where we're trading now, which is 135.94, and add 53 to it. So if we take 135.94 and we add 53, then we're looking at 136.47, which is going to put us somewhere around about there. So I've just got an idea of where that's coming in on the upside. On the downside, take again 135.94, take away 53, we're looking at 135.41. So you can see again where that would approximately come in tomorrow. Again, the only reason I'm doing that is because I'm just starting to think about levels beyond that area for a potential mean reversion trade, because as it stands at the moment, I've got no clear directional bias. So let's look at the upside potential levels first. Now, there is a level, it stands out to me like a sore thumb. Hopefully it does you too, but it's that low there, which is the last low pre-break on the daily chart that's untested above market. It's the last low pre-break because it's a swing low, but you can actually see this rejection low just above it. So you've got two levels there in very, very close proximity. And what's interesting as well is if you were to take a fib, which I do use from time to time, and draw it from the high all the way to the low, you've got the midpoint, or the 50% of the entire move coming right between those two price points. So we know that is a very important area. So what I do is I come down to the hourly time frame and I will go and look at that level more closely and try and refine a point at which I can trade into that. Now, if I'm looking at a potential price point that's naked, then I'm looking at this low here. You can see that we made this low, we pushed through it, made a tiny wick on that candle, broke lower, pulled back here, but there's a gap between those two candles. That low is untested. So what I would do is refine the level to there, and that would be the point that I'd be looking to put a limit order to sell at. Now, where would I place a stop on a trade like that? You might think the thrust candle, but I've already explained that we've got this level, which is the very last rejection point on the daily above it, and I would want a stop beyond that for additional security. So a stop would need to go above that upper level. So at the moment, it would be looking like selling here with a stop there. And let's just extrapolate that across to where we are now. So it would look like that. Now, if I was to get in there, where would I be playing for? And that's a question that I can't answer yet. It would be the last high that's made before we get to that area. You might think, well, why not look for a move back there? It's nearly 5R. You could play that, and hell, you might even get it. But these levels cause reactions in price, insanely precise reactions. But that's just because big traders hit them, so rotation is very likely. But a full-scale reversal, you need a real reason to believe it's going to turn and keep going that far. You need like a magnet for price, a little like the inside day failure strategy in the first trade I took this month in BTC that I called to you. There was a clear reason to expect price to go a considerable distance further than the FTA. So I wouldn't anticipate on it reversing that far, but I can't put a target in yet because I can't see the structure coming up into that area. I'm sure it will probably form some sort of structure somewhere in here that I would then lean on as the FTA. If you had to pin me down to structure at the moment and said you've got to put a target in now, I would have it here. Why? Because you've got these lows and this pullback high. For me, it's not enough to just say, oh look, this is a big level on the daily, let's look for it to absolutely shit the bed. For me, I am just looking for a short-term reaction unless I've got a clear higher time frame bias. So at the moment, again, I would frame the trade like this. Now, on the downside in dollar Canadian, I like this last high pre-break before we moved up and out of here. This level right here. We know that's already going to be past ATR because we've plotted where ATR could come in tomorrow based on where we're trading right now. This would be considerably far past it. It is also the first naked price point to the downside. This one is technically, I think, a naked price point. This high was 135.458. That low was 35.462. Technically that's naked, but it looks a little bit too early on for me to begin buying. This would be a real overextension of ATR, which could well happen on CPI, and I think it's highly likely that you'd get a reaction if we moved down there. So how would I frame that trade? I would put an order in to buy off that high, which is the last high pre-break, and I would put a stop underneath this thrust candle using that thrust candle approach. That is, in my opinion, out of the way of structure. If you look around and you see these lows and you look at these highs over here, I guess that is a subjective decision, but I see it as being out of the way of structure. The target for that would again be a quick play, and I would have it looking like that for roughly a 1.67R. Why am I choosing that low for a target? Because you can see some resistance over here, and that was the low of the retest of that area. Now again, these targets can change when the market trades close to these levels, but at the moment I'm giving you an example of how I would come in tomorrow on a big news day for dollar Canadian with no bias about where the fuck this thing is going, but have trades framed above and below market, which are clear mean reversion plays. And we would really have to extend past ATR to get to those areas. I mean, they're a long way off. Gun to my head, I'm not convinced either of those would hit tomorrow, but they don't necessarily have to hit tomorrow. They might hit fucking Wednesday. They might hit during our live day. Those orders aren't in the market right now, in full transparency, because I've got plenty of time to put them in, but they will be going in. So if we accelerate up into that area, certainly tomorrow, or push down here, rest assured I will have an order in, especially if it's a short, sharp move. Again, if you look at previous examples I've given, you want to be careful of the drift, you want to be careful of the market making support and then breaking it, retesting the support and basically putting in FTAs that very much diminish your R. But as long as that doesn't happen, those orders would stay in. And when people ask me what is a typical example of how you trade, this is one of my approaches. This is not the only approach I trade. Not every trade has to have ATR involved in it at all, but this is how I would frame the ATR mean reversion trade. Looking above, looking below at key levels. And that's your dollar Canadian. So why would I not bid the high of the spike candle down here? You technically could. I mean, you're splitting hairs. They're so close together. You're talking about the difference between buying 35.05 and 35.03. There's 2 pips in it. And if I've noticed one thing, and if you've noticed one thing about my trading, the market loves to fucking turn a fraction above where I put my bid or a fraction below where I put my offer. So when there's something like that, I'm not trying to get pip perfect. That is already a huge overshoot of ATR, and for the sake of 2 pips, you know, I'm fine putting it there. But I totally understand your point. And if you want to put it there and you want to turn around to me afterwards and say, I've got a better entry than you, you're more than welcome to. If you miss it, I'm going to call you a cunt, and that's the flip side. So let's move on from dollar Canadian I'm just looking at the questions. Did I take the copper trade today? No, I don't trade copper. I will never look at a copper chart again as long as I live. And don't ever show me one. I've got bad memories of copper. Stop trying to wind me up. I don't know if you are winding me up. That could be a legitimate question. But anyway, if it is a legitimate question, you've done your ask because I'm not looking at it. So that's that. Now, let's move on to dollar yen. I tried to get long this today. Didn't manage it. There's something very interesting developing here. And the difference that you're going to see now in how I approach the market is dollar Canadian, I don't have a bias. I just have what I call reaction points above and below market. Here, I have actually got a clear bias that I want to try and get on board. So what you have is an SFP that has formed on the charts. It is also a hammer, but it's an SFP of these two equal lows. There was a play that I was looking to try and take today. When we broke under that level, see how we held it as resistance. So what was support flushed became resistance. We moved to a new low. We traded back up into the level, came back down again, then we thrust through it, finally recaptured it. As soon as we recaptured that, I was looking for a clean break up to then come in and sit on the bid off of a last high pre-break that had a clear thrust candle to put my stop beneath, and it just didn't occur here. It just didn't set up in the way I wanted. There was no naked level when we were breaking up here to the downside. There was no clear thrust candle, and that's always one of the things I want to see. So I didn't get involved in this today, but I am still watching it. So one thing that I have told you is that when you have a hammer like this, many times the next day price is going to come back and revisit the low of the day before, which is a huge level because it is, of course, this key support that we flushed. So that is going to be a very, very critical point to try and pick up along on the downside. Now, because there is no naked price point there to lean on, and again, no thrust candle, I am simply just going to move to watching price at that area and looking for a bullish reaction on the hourly in order to engage on the buy side. It's the same thing that I told you I was doing when I called BTC. I said I'm not buying it blind, I'm just going to watch the level, because if this comes back there, I want to see if it reacts, and if it starts to react and look bullish, then I see no other play other than to get long there. Now, of course, what this means is that I might be getting an alert if this hits overnight. And if that happens, it means I'll be getting broken sleep. And if that happens, it means by this time tomorrow night, it's going to have been a long, long day, and there'll be more chance of you enjoying a wank from Edward Scissorhands than me turning up to the evening session. So if this hits and goes higher, then you better bet on tomorrow night being rescheduled. What would I be looking for in terms of a reaction from there? A hammer, an inside hour failure with the failure candle having a significant wick, a bullish engulfing, something off of this level that looks like price is reacting to it. I can't give you every single possible eventuality for what could happen down at that level, but watch that fucking level. That's all I'm going to tell you. Now, if I get involved there, then what would I be using as a stop? That's of course going to be based on the hourly price action that I see. So let's say I saw a candle like this, then the entry would be as we break the high of it with a stop below the low. That would be a typical entry if I saw a hammer candle there. Now, as far as where the target's going to go, because we've got a bias, I'm looking to run it to the next level on this time frame, which is coming in here. Why have I chosen there? Because it's a swing low support there, and it's the low of this rejection candle. And obviously if we extrapolate that to the left, you can see key support over here. So I would not want to bet that the market is going to get through that level easily. I can see it making a run on it, but in all honesty, I can't see it getting through there too easily. And that's not to say that I want to sell it there, Let's deal with that later. For now, I just want to try and get long and ride it up there. Why is it that you manage at night if you have your stop and target already in? Well, I don't have my stop and target in on this trade, so I've got to watch it tonight. But generally, I'll tend to manage in the night because many times in the past I've been burnt with having stops and targets in, and then I have a good night's sleep and wake up in the morning only to find that it's got fucking 3 pips from my target and then reversed on me, and I should have been out from an evolving R perspective, or there was a clear point to trail my stop that could have got me a much better exit, or there was an exit sign that I should have taken that I've missed. So that's dollar Canadian and that's dollar yen covered. Let's have one more. Euro dollar. Okay, so it's Monday, just in case you hadn't fucking noticed. And what you do when it's Monday is you mark out the open. That's for the euro dollar. So the open is 110.762. Now, I'm aware, you should be aware as well of the statistics for us to return to that open sometime between Tuesday to Friday. And the majority of those returns will be on a Tuesday. The 52-week rolling past probability of a return to the open is running at 84.62%. The 3-year rolling is at 76.92%. However, we've seen a wider range day today, and as a result, if I'm going to take this trade, I'm going to look for one of two things. I'm either going to look for it to lose key structure to the downside, and then I'll look to get involved to play back to the open, or I'm going to look for it to try and take stops to the upside and potentially trap traders and then trade a reversal. So let's go through those two scenarios in turn. The level to the downside that I'm interested in is Friday's high, which is essentially a shooting star, although a minor one. I mean, fucking hell, that's smaller than Donald Trump's dick, but there is a minor little shooting star there. That's the high of it. And if we get a break below that on the hourly, then I would sell a return to that as long as there's space. So by now you should probably know what a rounded retest is, but again, if we move down through here, you're looking for an hourly close through that high. Not this last high pre-break, but this high, because that's Friday's high. That's very important to me. So it's to close through that, and then we're looking to sell wherever the last low pre-break is when we get down through that level. And as long as it doesn't trade in the next candle, as long as at least one candle has occurred without it testing that last low pre-break, my limit order will go in. There needs to be a thrust candle, of course, for me to put my stop behind, so there's a lot of variables coming in here. But to make it as simple as I can, break down through here, I've certainly turned bearish, looking for a return to the Monday open. So it's just a question of trying to get involved if it sets up right. On the upside, if we don't make that move and we keep moving higher from here, naturally I'm going to have my eye on this last swing high right there. Now, if we have a look at what the structure looks like on the hourly, it's more than possible we could get an SFP of that. And because of the statistics that are so high probability for a return to the Monday open, I would be interested to engage if we get an SFP. However, I don't want you to presume that if there is an SFP there, I have engaged. If I engage, I will record this trade. But again, I don't want you to think, oh, there's an SFP, Tom must be short. I am so fucking picky about the SFPs I trade. They have to look right. I don't like them, for example, if they're a wide-ranging candle that have literally just wicked the high by a couple of pips and then closed in the top 90% of the candle. That's something that I'm not really going to like the look of. If you want to try and pin me down to a candle that I'd love to see there, it would be something like a shooting star, a long tail, a long rejection wick that's broken above and closed below. If you do see an SFP there and you want to know whether I'm going to take it, you can always send me a DM on Twitter. Don't bother tweeting me publicly, because if you think I'm announcing that fucking trade to the world, think again. It's poker, boys. Can't let everybody see your hand. There's enough people in here that can see my fucking hand. I want 250,000 people on Twitter seeing it. Now, what about a mean reversion trade? If we just accelerate through that level and move to the upside, I'm going to show you a level that I want to short here, and I appreciate when you watch these, some of you might think, I don't know that I'd spot that level, and maybe it does look to some of you like I'm just plucking these levels out of my arse, but I like this one. I don't know if anyone can see that, or anyone really can understand why I want to get in there, but take this high, look beyond it, and where's the first naked level that you see? You probably see that. But if you have a look at this level here, look at the structure to the left and the interplay. So you've got this high, then you've got all of these highs, and you're looking at the last naked low in that region. That's also as close as possible as to where I would feel wrong on the trade, which is something I'm always keen on trying to do, because if I was to place a stop on that, I would want a stop there. Now, why would I not put a stop above this thrust candle? Because again, it would be right into those highs. It would still be into structure. So I've gone another candle back. Let me really zoom in there. So rather than putting a stop above this candle, which is a thrust candle that closed down through the low I'm looking to sell, I've gone back to the next little low. These are not major lows. This is a low at fucking 10 o'clock at night. But I've just gone back to that little low and used that thrust candle as my stop, and my stop would go a pip beyond that. So I would look to come in short there. And where would I play that to? I'm sure you're all thinking, Monday open. No, you're wrong. I'd play it there. Now, why the fuck would I play it there if I'm talking about the market going back to the Monday open? What are you talking about, Tom? Well, I prefer to chunk on some of these trades, which basically means get out, wait, see what happens. See what happens at that high. Maybe we lose it and we get back down below it and I can sell again. I'll be honest, as it stands at the moment, if we get all of the way up here, I'm not sure I can see it coming all the way back to the Monday open by end of week. Now, I know the stats suggest it will, but I'm going to take what I see in front of me. That's already a 1.3R. I think it's a very high probability trade, and there's every opportunity to then see what it does here and potentially take another entry. There's a lot of distance back to this Monday open. But I wanted to draw your attention specifically on this euro dollar to how I am not using the thrust candle, but I'm using one candle back because it's safer from a structure perspective. And I'm going to end by talking about BTC, not because I can see anything here, I can't, but I wanted to go through BTC in reference to what happened today, because the first tweet I fucking woke up to this morning was a screenshot of someone that had bought it here off this little rejection, and they'd put their stop there underneath that thrust, and they said, oh, I've stopped out, what did I do wrong? I mean, come on, man. I know I said use a thrust, but even fucking Stevie Wonder could have placed a better stop than that, mate. I mean, you're stopping right into the true last high pre-break. Right into it. Like, if you want to buy, you actually want to be buying right as you stopped out. So you have completely done your ass there. And that's really all I can say about that. You'll note that it actually does extend down here to this very last rejection high. But either way, if I was going to trade this, I would have gone here off the last high pre-break with a stop underneath this thrust and then tried to ride that up. If you'd placed me long that and I wasn't long that and it had started to move up, how would I have managed that trade? You can see it comes down into the level, gets back above it, comes back to the level, sits on it, and then pushes up and clears the last high here, and my stop would go underneath that candle. Fuck me, that's a break-even stop. But coincidental, right? So you can see what I'm doing here. If there's a break-even stop, well, hey, that's the structure. That's not me moving to break-even because I'm shit scared and I want to protect my profits. That's the structure, guys. Now, listen, because I know some of you think, oh, this guy's chatting absolute bullshit here. He's definitely moving to break-even. What a fraud. Well, just remember what I did in gold. When I got long this gold off the pullback to this hammer high here, And then I got this little candle that broke through structure and I moved my stop underneath that. Same principle in BTC. As soon as it starts to move in my favour, I am getting that stop up, to protect myself, obviously, if it reverses. But I didn't take that trade. And I didn't take a trade in BTC here off this level because I didn't see any narrative behind trading that other than, it's a fairly decent level. Context is absolutely key when you're trading. What's there at that level other than, yes, there was some resistance and here's the last high pre-break? Was it past ATR to increase the chance of mean reversion, like the first trade I took during EFL in dollar CAD? No. Was there a potential for a trap on the daily, like an inside day failure, like the trade I called in BTC the other day? No. Was there a clear level for it to run to, like there was in the trade that I showed you in gold? No, again. So, owed to the level, you still get a reaction to it. You could still have made some money on that trade. But if there's no real narrative behind these levels, your results are going to be very hit and miss with drawing levels and just cracking them. I can absolutely promise you, because I am a levels trader. And without context, I think you'll be scratching your head, getting some winners, getting some losers, and basically treading water for a long time. There has to be context, and there won't be context on every level that the market trades into. That's why I pass so many of them by. Sometimes people say to me, "What? You didn't trade BTC? What a level!" And I'll be like, "Well, yeah, it's a good level, but what else backs it up?" And for me, especially these days, there's got to be something backing it up. There's got to be a narrative for me to say, this price is going to reverse, that I'm safe with the stop that I've got in, and that there is a clear direction for price to move to, that I think it can make its way to with a high probability. If you look at some of the trades that I've done in the past, you might be mistaken for thinking, "Oh, mate, he's just fucking banging in levels here and there." But there's always more to it than that, because, as I've said so many times, there are levels absolutely everywhere, but context is key. So yeah, if you had put me in that, if you had thrown me into it, like my old boss at Futex used to do, just lean over your shoulder and fucking enter you into the market and then tell you to manage the fucking thing, where would I have gone for? I would probably have gone for this low on the daily chart, and you can see where that comes in on the hourly. I'd have refined it to there and thought, I'm in this trade, it's moving into profit, can it get up there? I'd have looked for that, I'd have trailed a stop under this candle, I'd have been taken out for basically break even. And I don't see anything in BTC at the moment because I don't see a narrative. I see levels everywhere, but I see no clear narrative. We will talk more about this on Thursday. Like I said, on a Thursday live session, I'll try and take you through all the charts and say, why don't I see anything when I look at it? But again, just to appraise you of what we're looking at for tomorrow. So I'm looking for a potential short up here in the euro dollar. I will actually put that order in probably before I go to bed tonight to sell that. I will look for an SFP of this high. I will look for a short back to the Monday open if we close down through this low and we get a rounded retest with space. That's the euro dollar. Dollar yen, I will be out of bed tonight if this level trades, and I will be watching it on the hourly time frame for some bullish price action. Bullish price action is not a tiny little fucking green candle that's range is 3 pips, but it's green, let's get in. No, it has to look bullish. It might not look bullish and it might just rotate higher without me. If I get a trade in that, I will turn the recorder on so that you'll see it. And then of course we've got the dollar CAD. So dollar CAD should be a big mover tomorrow. We've got CPI. There's levels above and below market. Both those orders are going to go in. I probably won't put them in tonight. It's been a long day. I'll put them in tomorrow morning, but they will be going in. How long should we wait for hourly close? It can happen 10 hours later. What? What I'm talking about is have a look if price hits this level and then look at what it does on the hourly candle that hits that level. I see what you mean. It could sit on it for an hour and nothing could happen. And then, the next hour could be an inside hour, and then the third hour after that could be an inside hour with a failure and a spike candle. I do see what you mean, but now you'll understand why I sometimes have a sleepless night. 24-hour job, lads. Sorry, Selena did remind me that there is women in here as well. So, ladies and gents, 24-hour job. That's why when you get to my age, you're 45 but you look 60. Because you're up all night managing fucking trades. But it's okay because, with your profits, you can buy a really good brand of moisturiser and get some cosmetic surgery. So, not a massive number of markets covered tonight, but you've got a few frames of reference, you've got a few things to look out for and track in real time. So buckle up, because I think we're getting some action this week. Nah, mate, you're not getting any action. I'm getting the action. You're getting about as much fucking action as that unused condom that you've had in your wallet for the last 10 years. Just in case. Alright, I'm out. Cheers, ledges.